Okay, time for the last installment with our guest of the hour, Fred and Johanna in the other corner. This is the point of the show where we wrap it all up and we make it usable and actionable and bring it home to the viewer. So leave them with something digestible for their breakfast session.
Digestible. I mean, seeing clients, there's a lot of confusion out there. Our view is
you think so?
There's a lot of confusion.
I'm not so sure. I'm not sure about that.
People are on the sidelines. They're not sure what to do at this point in time. I think ultimately Asia, it will be okay. We're not going to see a rerun of 2008.
Well, thank goodness for that.
Well, I mean, it looks, at some point, it looks like that, right? If you look at some of the global PMI data, for example, it's come down to levels we saw last in 2008. But ultimately, the framework, the vulnerabilities in Asia are different this time than they were in 2008. We're not as tied to the West in trade terms. We have more of a domestic market, more domestic China dynamism that helps us support growth.
Okay, Johanna, quickly, you concur before we open it up?
Well, certainly, I mean, the only thing I can say is that we're in a better position, but we cannot decouple. We may be a low beta region to risk, so when there's a sell-off, we sell off much less, especially on the currency side. Equity is obviously a different argument, but yes, the economy it should be able to still outperform growth-wise. The other thing I wanted to say is, even though we're looking a little bit better, watch out for the fact that inflation pressures are now a little bit more muted. So I think if we do have sort of risk on where rates kind of rebound, I think there's an opportunity there to, our bias is still to receive rates at a number of curves on the front end in Asia, because we do think, you know, although people are not cutting very aggressively yet, we think there's a little bit room of a few, not a lot, but a few to cut and keep rates very low for a while, especially as we're going to do more intervention from central banks in the U.S. and
bring Marty in. Marty?
Johanna, who has the most room to cut? To do these, I guess, comfort cuts, as you suggest.
Well, not a lot, but I do think China could cut, especially since their inflation forecast, their threshold is about 4%, and I do think it's going to come off to sub 3% for the next several months, and that should give them a little bit more room to cut. I do think that it's possible India could cut a little bit as well, eventually when things kind of stabilize there, and actually, you know, we actually call for Korea potentially to cut at least 1 or 2 times.
It's interesting you say that, because our view is slightly different. Because one fundamental worry that we have is that Asia still has very structural inflation pressures, that cyclically inflation has come off, it all looks better, oil has sold off, but if you look at wage gains in China, if you look at the tightness of labor markets across the region, the worry that we have is that if you get a quick rebound in growth and risk on, that inflation could come back more quickly this cycle. So, I mean, from our perspective, receiving rates would be, you know, it depends on how quickly growth comes back, obviously.
Exactly, and we're not calling for the start of a huge major cyclical easing pattern. Just we're talking maybe potentially just a limited cuts. Again, it's not the same way that we saw back in sort of the 08, 09 when we had huge cuts. We're talking 1 to 2 cuts, and not some of these markets.
Comfort cuts.
Comfort cuts.
This conversation is getting too heated and too nasty. You two take it outside, okay? Because this is a family channel. Good seeing you, Fred. Good seeing you, Johanna.